Hi, this is Mark with ValueCharts.com. I have been bottom fishing tonight in the soybeans market, and so far it looks like things are progressing nicely. But let me show you exactly what I've been looking at. If you'll notice on the 30-minute chart here, we see soybeans coming down to close to a retest of the lows that were placed last Friday on January 4th. We see that we are trading in moderately undervalued territory as well. We see a much higher value here in the MQ momentum indicator here on the bottom. Now, when you see a situation where you're trading in moderately undervalued and MQ momentum indicator still is actually green and positive, that can be a very bullish sign. Notice also that the MQ momentum values here in the 60-minute chart are higher, and then the MQ momentum indicator line, this blue line here on the 120-minute chart, are higher as well. So this actually looks pretty good so far. Notice on the weekly situation as well, we took out the lows of back in November 16th. We took those lows out on Friday, and so the market cleared out all the stops now, and I think that it looks like we're moderately undervalued as well on a weekly basis, and we have a bullish divergence forming here. We made new lows barely on the prices, and then we also have a much higher histogram reading here on the weekly basis, so that bodes well potentially for the soybeans market to head higher. And then also we have slightly higher indicator histogram, I should say, bars here on the daily basis as well when compared to the previous sell-off. So combining all of these things together, it looks like we've got a good situation forming. That's why I've been bottom fishing tonight in soybeans. I bought 3 contracts a little bit earlier. I'm up close to $700 so far in the trade. Let me go ahead and show you a screenshot of that exact trade here. Okay, this is a snapshot or just a chart of the actual March 2013 soybeans contract. You can see where my 3-lot was entered. A little premature here, but I was really watching this bullish divergence form here. We're still undervalued on a daily and weekly basis, so that was motivation for me. The drill down entry certainly could have been better had I waited for the moderately undervalued prices down here. I would have had a better fill, but I'm up almost $800 in the trade right now, so I'm not too terribly upset, but certainly could have done a little better job on the drill down entry level here. But I've got my stop level right now placed below the low of the session so far. I fully expect us to clear the highs of this previous correction, which is right around 1374.50, 1374 and a half cent there, very quickly here. So I think if this is the real deal, if we actually have caught the low here, we should start to see some nice progress to the upside over the upcoming days and weeks. So we'll continue to follow this, but this is the type of trading opportunity I like to look for, and that is the bullish divergence, moderately undervalued here. And this is also what we call a value divergence as well. You can't see it as clearly on the value bars indicator, but if you had a value charts price window opened up at the bottom of our charting window, you would see that the previous value charts low was much lower. You can see trading down into significantly undervalued here, and then bouncing up and only reaching the moderately undervalued point right there. And that oftentimes can be indicative of a market that's strengthening and ready to head higher. Thanks for watching.